What's up, everybody? Welcome back to Roy Blue Effects. In today's video, we're going to talk about where traders lose money and how you can overcome these areas so you don't lose money. So thank you for those of you who have actually subscribed to our channel. And if you haven't subscribed to our channel, go ahead right now and subscribe to our channel because we always give out free content. Also, I do want to say that we do have our course at $799 right now, guys. All right. We did have it at $1,300, but now we have it at $799. That's $600 away from the original price. We will be raising this course back up to $1,300 because we are having a lot of people coming into these courses, and I can only handle so much of the students in the academy. So if you're interested, go ahead and DM us right now on Instagram at royalblue.fx to ask us about the payment options, and we will take you from there. If you do purchase this course at $799, we do offer 5 free one-on-one 1-hour online sessions with us, me in particularly. It also comes with 15 free signals of your choice, and you also get access to the online Discord. So without any further ado, guys, let's begin with this video. All right, so where do traders lose money? This is going to be a very interesting subject because a lot of us can all relate to this, and a lot of us have lost money in the past, probably are still losing money at this time, right? But I'm going to show you guys in this video right now where a lot of traders lose money, and you might be shocked. This actually is intertwined between how we trade and how we avoid losses, where we simply see where traders are buying or selling most of the time, and how we avoid those areas, and then we wait for either the manipulation to happen and then to run, or we just simultaneously wait for pretty much everybody to be swept, taken out from either the highs or the lows, and then we enter. Now I'm going to show you guys right here as an example. Okay, so let's just do this. I'm going to show you guys an example. So when prices are running bullish like this, right, and then prices run low right over here, okay, you can see that this right here is liquidity. Now, as you understand, everything is liquidity, every high and every low, relative highs, relative lows, triple tops, triple bottoms, and so forth, even range liquidity, right? Everything. However, we look at liquidity in just a slight different way. Now, I'm not going to go too far into how we look at it exactly, but I will tell you this. When you find a low or a high, that is liquidity. Essentially, that is where price reverses and it runs the other way. And this is where a lot of people get tricked, okay? So let's just say when prices are going bullish, people often trade supply and demand. It's, it's a SMC style of trading. And a lot of traders expect for prices to reach their demand zones. Let's just say in this case, it's a demand zone because people are buying from the demand right here, right? And it's bullish. So people are expecting to buy off a demand zone, and that's not the key problem here. Isn't that the demand zone is the problem, is that there is no liquidity in that supply or demand zone. Okay, so let me explain. Let me continue further on here. While prices are running bullish here, right, people are waiting for price to break, right, prices are retracing. Now, what is your average expectation here for those average traders, for those supply and demand traders, is to wait for prices to get back to their demand zone, right? Now, here's where the sort of kill zone happens, or where everyone gets manipulated, right, is when prices reach the demand, people expect for prices to rise. Right? It's very typical. However, one thing we need to be mindful of here is we need to ask ourselves, where is liquidity? Is the liquidity even in between this low and this high? Okay, and that's the first question, right? If there's no liquidity, why should we even bother trading? We need to allow the markets to start creating that liquidity, right? To present the liquidity. Now, in these impulses, like let's just say for this impulse here, for example, this could be an all-out imbalance impulse. Okay, that means just imbalance is showing. There's barely any, little lows or highs. The little micro lows or highs that you see like this, right? And if there is something like this is still considered an imbalance, because for us, when the market runs and it just shows imbalance and it shows small microstructure, that also is considered to be imbalance on the higher time frames. Okay, so when price runs, this is an imbalance impulsive move. When price comes back down, this could also be an imbalance impulsive bearish move, right? That means there's no liquidity in either the impulse going up or the impulse going down. Therefore, there is no liquidity, right? Now, let me just show you on a little trick, and I don't know if a lot of people are even taught to seeing the price this way, okay? Because I had to sort of learn the hard way when I started out learning on my own, was that whatever you see on the time frame is liquidity, okay? Let me specify this again. Whatever you see on this time frame is your liquidity, okay? That means if we see price coming to respect this demand zone here, does that mean we should be buying right at this demand? Most likely not, right? Because price is just got to this demand and it's just filling up all this imbalance, right? And now we're anticipating for liquidity to show itself. We're waiting for other traders to show the impulsive buy, where they are saying to themselves where they think that this is where the market should go, right? Where the market should run impulsively. However, we let these people run, show us the evidence that there are buyers here that are interested, right? So what do? They buy here, they leave their stop losses right at the low, just like that. And then what happens when price does? It comes right back down, sweeps their stop losses, just like that, right? And once that happens, now this is a connection between this low and this high and this internal low as the liquidity that was drawn for us to get in, right? So once that low is swept, we can now look for evidence to see if price can start running bullish. Because why is that? Whenever there's liquidity right below, that means the market should what? Run, right? We want the markets to run. Therefore, we will look for evidence for prices to run bullish. Now, if we're looking to run bullish here, right, what do we expect here? Remember, we have to trade what we see, not what we think. We have to clearly see it on one time frame. You can't just be running around and start anticipating for things to happen ahead of what the market is trying to tell you what is currently happening now, right? However, we can anticipate things ahead in the future if we play what price has left us before, right? Historically, right? So if we're looking at this low and this high as a historical point, right, then now we can start anticipating what can happen in the future, right? And the future is this. We can see that in the future, price created another low, right? Internal low, where it swept the liquidity, where buyers were involved. Now price sweeps. This is where the trap happens, okay? The trap is when people buy here early, right? Because there's no evidence of liquidity. And that's one of the traps. People buy here too early, price comes down, takes them out, and then you and I come in. This means we look for evidence for prices to rise, right? We could also wait for prices to break the previous old internal high, which is this, right? Now this is pure evidence that price is wanting to run bullish, right? So one of the key factors here, the mistakes, is when people are buying from the demand where there's no internal liquidity, okay? That's just one. Let's talk about the second one. The second one is one of my favorites. In fact, it's how I always trade. And this could happen almost the same way that this first example that we just drew, right? When prices are going bullish, right? And then now prices run the low. We just created liquidity here. As you can see there's a low, there's an internal low, right? Price swept us liquidity, and now we have traders that are trapped. That means, let's explain this. We have these buyers trapped when they bought, right? Their stop loss was taken out. Now, some of the traders that do buy in this demand zone do put their stop losses below this low, right? Because we want to have these traders are typically thinking they want to leave their stop loss just farther away from their entry, just a little farther away from the entry, so that way they don't get stomped out, right? This is very typically taught in everybody's course, every seminar probably, or what have you, and that's what traders typically do, right? So every low and every high there are stop losses, right? So in this case there are stop losses here because these buyers bought here, right? These buyers bought here, so there's stop losses here and here. There's a lot of money involved. So let's talk about the trap. Where's this trap? The trap is similar to that first example that I showed you, right? The trap was here. When you buy here, there is simply no liquidity involved, right? So either this internal low can be the liquidity and price can run just like this, or we can also combine all this liquidity right here, which is your relative lows. Price comes and runs that low, right? This is the trap again. Price comes down. Now we have these buyers trapped, right? And then we also have breakout traders. The breakout traders are coming in when they see a break of this low. They're anticipating for prices to come out. So now they just sold, right, wherever, to break out, right, to continue price bearish. That's what breakout traders do, right? So we got breakout traders also trapped in here as well. Price runs them out, right, just like this, okay? And then what are we expecting here? We're expecting for prices to run bullish, only because a lot of traders have been taught to trade supply and demand, right where there's perfect order flow, right? And same thing goes for this. If you do this, right, something like this is a trend line trading, right? So that's what a lot of traders do. They follow the trend line, that low and high scenario, right? And then they just follow that trend line, right? So if you are doing this, stop it, because that's where all the liquidity is. That's where the manipulation happens. All right, so the manipulation comes here. It tricked out these demand traders, tricked out these breakout traders. What else happens here? Let's see. When prices start to run, there's going to be a lot of supply and demand traders waiting for price to come in here. So this can also be manipulated, right? Where it means price runs bearish, just like this. Price is reverse, just like this. Now everyone's got themselves trapped. That means we got the demand traders, we got the breakout traders. We can also have, say, the break and retest traders, which could be here, right? Because price can come down, dip below, run up like this, right? Then we also got the supply traders trapped as well. And once price run up, now we've just swept everybody. We took out everybody's liquidity. We've taken out everybody. We've cleared everyone out. This is that famous trap that traps almost everybody, pretty much everybody. And then I come in when people try. Now watch this. When liquidity is swept from this high, right over here, let's make this a little more cleaner. Maybe I can draw with this right here. So let's just do this, for example. We're going to do that, right? Price comes in, tricks out the break and retest, comes to supply, tricks the supply zone, makes them happy, makes these traders happy, takes them out to then do this. Let's just redraw this a little bit slowly. You can see right here again, this was the supply zone, right? This was your break and retest. I can just kind of do that right there. There's your BNR break and retest traders, right? And then you also got your breakout traders. Let's even just do this right here for these demand traders there. And we got your supply traders here, right? And you got your, let's do your breakout traders, which means this is what happened with the breakout traders. We'll make this a color, let's say we'll make this color maybe green or something. Hold on a second. Why is it not doing anything? It's not acting up. Hold on 1 second, guys. Here we go. Let me just adjust this quickly. Okay. That's odd. Can't see that. No problem. We'll just do this, and we'll just use this as the breakout trader. Okay, so there we go. Now you see there are multiple areas where price is manipulating all the traders, right? Which is all the retail traders. Once this all happens, you can see that in all these scenarios, the market has manipulated everybody. So we want to avoid supply and demand, right? We also want to avoid the supply in this case, right? We also want to avoid the demand. We also want to avoid the breakout and retest trading, right? Now, once all this has happened, okay, where is price going? This is the big hairy question. Where is price going? Well, in this case, since we had all these buyers coming up here, right? Watch this. Price also manipulated this demand, right? It might have even actually just took out this demand zone. It doesn't even have to always respect the demand zone. Okay, something like this. Price could look like this, simply like this. Sweeps out this low, right, as liquidity, and then price takes off. Okay, now this is where everyone got manipulated. No one has ever gotten the chance to be involved in this move, okay? Now, this is my ultimate, my most favorite time to trade. What do I mean by this? This is only when I see so much manipulation going on that I know there's a high probability chance that price is going to run up because it has tricked everybody and swept everybody out, and then we just trade the opposite way, right? One of the main things I do want to tell you is that as a trader, most of the time you want to be trading against the grain. If you don't know what that means, check that, Google that out. But in simplest terms is you go against what everybody's doing, right? So if you have one of those, sort of those technologies where it shows you, say, for example, like everyone, maybe 60 or 70% of people are going long and, maybe 30, 40% are going short, you most likely want to go against everybody. Now, this isn't true to to the, this isn't true to the most extent. It could be true to some extent. However, this can be true. Now, this is true. We know this can be true is only because a lot of the times when we understand that the trading market is 1% people win, 99% of people lose, right? So that is going against the grain. That's because we know that 99% don't know where to buy and or sell and lose versus that 1%, right? So think about that. It's a little food for thought. So this is the exact same scenario, guys. The way I trade, okay, and where everyone is trapped. You can use this exact same scenario for the bearish perspective as well, okay? So let me go show you guys on a live chart example right now and show you how this looks, okay? In fact, I've been doing a little replay. I always do a replay during the weekends. Just so I can always see if I have any loopholes, if I can always get my trading up to par to where it needs to be, right? I always want to be sharp. So let's just talk about this. I'm going to actually even forget about the sessions. Let's see, where are the sessions? Right here. There we go. Okay, let's talk about this. Right here. You can see where a lot of traders have been trapped. Right over here, we have a bunch of liquidity being swept, right? We see liquidity was swept, price ran. Now, where are traders trapped? If we take a look over here, you can see that we have a high pushing price low, right? So therefore, we know when buyers are buying from demand zones like so, you can see there's a demand, other traders are buying off of demand. This is a smart money trap, right? That means people are trapped here. Price runs, takes out everybody here, including this low right here. Price runs up. Now, what does it do? It takes out the high. And you can see, let's go zoom in here, where are other traders trapped? You can see when we have a supply zone right here, we also have other traders trying to sell here. Right there, they sold, price took them out, right? What happened? Price took out this high. People are also trying to buy here. You can see there's your lows and highs. Now, let me just go maybe on a 10-minute maybe. I know I can't go down any lower than this, but right over here, you can clearly see it. We have the sellers sold, buyers bought, sold, bought, right? Then you can see once price took out the high right over here, once the high was taken, price came where? Took out this low, took everybody out, right? And then it reversed the other way around. You see that? So it pretty much swept everybody. Everyone was trapped. Even the breakout traders. When people sold from up here, right? They try to break out. They got trapped. Price reversed. I don't know why I keep going on the other higher time frame. Here we go. Just like that. Break out. People the market ran back up. Took them out. Is also taking out the the supply and demand traders over here. Okay, we also tricked out these supply and demand traders here. Okay, we also tricked out, again, I did it again. We also tricked out these supply and demand traders here, right here, where where demand's going up. Let me just zoom in here. You can see each low, right? Price came out, took everybody out, and ran, right? In my eyes, I knew this was bullish. This is where we're looking for price to run bullish. So therefore, we're looking for everybody to be swept. Let's look at another example here. Okay, right here. And obviously, these correspond. Everything that I'm doing here on my replay, on my backtesting, is corresponding to the sessions. Okay, the session, the sessions. So that means, for example, if I'm trading New York or London, I'm only corresponding to when those sessions open, and that's when I trade. I don't just trade, I don't backtest during, say Asia or Australian session. I have to correspond with the correct session. So in this case, I'm pretty sure this was New York. Yeah, it was right here. Okay, anyway, so let's talk about this. So what's happening here? We have, let's zoom in here. Let's put our demand zone here, right there. All right, so what do we see? We see there's a demand zone, right? What do you see right here? Right here, people are buying right here. What happened? People got tricked, right? So not only did these guys lose money, the demand traders lose money, also the breakout and retest traders, or the breakout traders, excuse me, right here, they try to sell it, right? price reverses against them, right? You also have break and retest traders, I'm assuming, right over here. You can see it, right? If you go, this is the 10 minute. If you go to the 1 minute, you'll clearly see this, but you can see this right here. You got your break and retest right here. Now, it's important to see all these traders. Eventually, when you're able to trade the way we do, and you'll be able to see where all these people are getting trapped. There's your break and retest. Price broke, retested, sold, came back up, took out the break and retest traders, right? We also manipulated. Did we manipulate the supply zone? No, we didn't. Supply just ran right through. At least that's what I see on this time frame. There could have been sellers involved in here where people sold. But look, this was a supply zone for people to sell, right? Then price ran up, took out the high again, just like this, took out the high. What happened? Price ran the low. And in fact, it ran this low because this is where London is being manipulated. Price swept on London, New York open at 6:30. The candle went down, took out everybody out, ran up. Okay? So again, this is another scenario where, say the breakout traders are what the breakout traders are doing. Price took out the high, right? Breakout traders are somewhere right around here trying to break out to sell after this break, but then they get manipulated again, right? So in this case, I'm buying because we understand the one core principle here is that we don't trade just purely supply and demand. We have to see the liquidity, and we have to see the liquidity before supply and demand. In fact, supply and demand is worthless if there's no liquidity, if there's nothing to be swept. We need for somebody to be swept. We need money and or stop losses for people to get manipulated in order for the market run. It's a sad thing, but it's the truth, right? Let's do another example here just to kind of show you here. Again, we see that there is a bunch of liquidity here. So let's just say for all time's sake, there's your demand zone because anything below is really just liquidity. There's your low, there's another low, right? But the next one would be right here, right? So you can see again, people bought from the demand, got swept, right? You can see that we had break and retest traders right here. Okay, you can also see the breakout traders, which are these guys running to sell it, right? Then they got manipulated when price ran. You can also see that the demand traders got manipulated. You can also see that supply and demand these supply traders here got also manipulated as well, right over here, right there, right? You can see all that, right? Let me just, you can zoom in here like this, right? So just what I showed you guys on the drawing, right, on the example drawings, this is exactly what I see all the time. And when they all get manipulated, right, we come in. In fact, most of the time, it may be a little already too late when you see all the manipulation happen, because after that, the market has done its job, taken out everybody, manipulated everybody, and then price just has already left. So you might be already too late. What we try to do is try to anticipate where the manipulation is going to happen, and then we go the other way. This is where you're trading against the grain. This is when you're trading against that 99%, right? Because a lot of times, like this, for example, when you see beautiful order flow going up like this, higher highs, higher lows, right? This is beautiful order flow. This is order flow where everyone, all the buyers and sellers are happy with each other. They're in congruency with each other until the banks come in and then just destroy everyone's happiness. Now everyone's sad, running away, which means here, this is when the banks are running low, right? Taking out everybody, right? And now everyone's upset. Everyone is fearing the market. They don't know where the market's going to run. Yet we come in and we trade with the banks, right? One thing I told my brother and my wife the other day was, I said, the only way you should trade is trade with the banks, right? If you want to fly, here's a really nice example, because I'll end this video right here, but I think you guys will understand it if I explain to you, if I tell you this, right? Just to have some sort of visual sense in your head. But the way this works is, if you want to fly with the eagles, you got to see where the eagles are, right? So you got to fly with the eagles all the way at the high, at the top, so that way we can come down and start seeing, where the targets are, where we can target to go and swoop in and take what we need and then run away, fly away, right? So that's what we are, right? So soar with the eagles, essentially, okay? This is how trading is done, guys, okay? And notice one last thing I just want to mention. Whenever you're trading, notice, see and or notice where the impulse is happening. Notice how this is impulsive, right? It doesn't give anybody a chance to come in to trade, to enter, right? Notice this impulse, right? Look how impulsive that is. Did we get any break and retest or, confirmation at these level areas? No. Price simply just swept the liquidity, swept everybody after it manipulated everybody, and it ran impulsively. That's how we trade. We trade the impulsive moves in the market. Okay? Same thing like this, right? Price took out everybody. Price, now this one in here had some confirmation. You can see that there's a break, a chalk, right? There's your demand zone. You can buy from there, right? Something like that. And then this one went off on its own, right? Let me show you one more last one, or just a few just here, just so I can show you, so I can prove my point. Right here, again, we had a bunch of liquidity sitting, right? Everyone got manipulated. We bought here, targeted the supply zone, right? You can see how impulsive this move is. Same thing here. Price broke, took out liquidity, price impulsively moved bullish. Same thing here. Price took out liquidity, impulsively moved bullish, right, guys? It's the same story over and over and over, but in those settings, before those impulsive moves happen, there's so much manipulation that happens, just like how I explained to you guys. If you guys have a lot of questions or any questions, go ahead and hit me on the comment section below. Let me know what you thought about this video, and also go ahead and rewatch this video, because you will finally start seeing how manipulation happens within the context of the setup, okay? Until then, guys, I love you. I will see you in another video from now.